The Kitco News team welcomes you to San Antonio, Texas. We're here covering the IPMI conference, one of the most prestigious conferences in the precious metals industry. And earlier we caught up with Phil Newman, research director over at GFMS. We asked him about the impact of QE2 on silver prices, not gold, silver. Here's what he had to say. A lot of talk surrounds the impact that the end of QE2 will have on gold, but we rarely hear about if it may impact silver prices.
Sure. Well, I think, perhaps some of the focus can be too much on the QE2 versus QE3. I think irrespective if there is no QE3 that comes into the markets, the US government, as well as other governments, frankly, will, in a sense, still have to maintain fairly loose monetary policy, given how slow or how stubborn the rise in GDP growth has been and continues to be. Even though sometimes we are having perhaps a fairly healthy or healthier increase in GDP growth, the underlying economy in terms of the unemployment rate is still remaining stubbornly high. So if you have that background then, the outlook for inflation remains fairly upbeat. And so investors in commodities, in precious metals, for gold and silver, we think will still return to the market later this year, which then tells us that the outlook for precious metal prices this year is still fairly upbeat.
And I know GFMS had projected 1600 gold by year end, but what is GFMS's forecast for silver?
Well, as you say, we see gold perhaps touching just in excess of $1,600 by the end of the year. We think that will help drag up silver as well. So we could see silver prices before the end of this year approach $50 per ounce.
Philip, what other issues do you think we really need to be looking at when we speak about the silver market?
Well, I think in contrast to gold, in the gold market, the investment is king. The underlying fabrication demand, which is dominated by jewellery, has been very weak. In silver, though, it's a very different ballgame. Yes, of course, investment demand is important. It's what drove prices higher, contributed to the weakness we've seen. But at the same time, you do have a much stronger underlying demand, principally in the context of the industrial sector. And I think sometimes that can be left behind or forgotten.
How much of a role would you say scrap supply plays on silver prices?
That's a very good question. Again, in the context of comparing with gold, it's sister metal, so to speak. Gold, the scrap is dominated by jewellery. It's very price sensitive. We get almost an immediate reaction when prices move up, allowing for price expectation influences. Silver is very different. The largest areas of scrap supply are photographic supplies and also industrial as well. Jewellery and silverware, much less important, but can play a role. So what we're seeing this year, we're seeing the jewellery scrap from the Western markets, the US, UK and elsewhere, respond positively to these prices that we've seen. But overall, though, we're still seeing a decline in photographic scrap. So it's a very difficult one to call. So we could see scrap supply this year perhaps still drift lower, or perhaps remain almost unchanged, as we see the falling photographic supplies perhaps offsetting some of the increases we're seeing on the jewellery. But if prices continue to strengthen, then we could see a further robust increase in the jewellery sector.
So overall, would you say it's still a bullish landscape for silver?
I think overall, yes. I mean, mine supply is continuing to rise, scrap supply is fairly benign, but the industrial segments, even with some of the uncertainties in the photovoltaic sector, are still looking to rise this year. And investment demand, ultimately, we think will be healthier as the year progresses. So ultimately, yes.
Philip, it's always a pleasure speaking with you. Thank you.
Thank you.
Reporting from San Antonio, I'm Daniela Cambone for Kitco News. Stay tuned to Kitco.com for more coverage from the IPMI.